How's it going, guys? This is going to be just a little bit of a stock trading tips kind of thing, and all we're going to do here is we're going to look at a free stock charts website, and I'm going to go through using that. I just started using it today a little bit because I was looking for something for a friend, and this seems to be pretty good. It doesn't have everything on it that I like, but hey, the price is right. It's free. You do have to register with your email and then go in and verify your email. And then once you log in, you can save charts and stuff. You can only open one chart at a time, but it's pretty easy to just scroll through them. The first thing I'm going to show you guys here is a list of the Dow Jones Index 30 stocks. This is the 30 stocks that make up the Dow Jones, and they are the Dow has never had garbage in their index. These are all dividend stocks, so if you're looking for a good list of dividend stocks, this is a good one to go by, because you can only be listed on the Dow if you pay dividends. So you can scroll through the S&P 500 and find probably all of these. They're listed there as well. A lot of them are also on the NASDAQ 100. But this is an absolute list of what we used to call blue chips. You'll see names on here like IBM, Goldman Sachs, Disney. They've been a part of the Dow for a really long time, Caterpillar. And it's just a good list. I don't know what else to say about it. It's just, compared to other stocks out there, most of these stocks are pretty mild as far as volatility, but there is money to be made on them selling options against your positions as well. But that's something we're going to learn later. And I do not make trade recommendations. Anything I do here is simply educational, and I am not suggesting you buy stock in anything. I'm simply saying if you are new to trading, or if you're an accomplished trader but you want a really good list of dividend stocks, it really doesn't get a whole lot better than the Dow 30 as far as just pure dividends. So, without further ado, we're going to do an intro video, and then we're going to get going here. So here we go. All right, the website you see here is tradingview.com, and as a registered user, when I go to that website, this is what I see. I am logged in. You can subscribe, and they remove ads and give you the ability to have multiple charts open at once and stuff like that, but I just don't care. I do look at charts. There are two ways that people gauge markets, and that's fundamental and technical analysis. Fundamental analysis is very simply supply and demand. News regarding a company, when they're reporting earnings, when they're going to be distributing dividends, things like that. But that's not what we're going to talk about either. We're just going to look at basic charting today in this lesson, and I'm going to show you just what I like to look at. And also to put this latest crazy move down, this panic COVID virus sell-off in perspective. It's just my opinion, and like I said, I am not a registered trade advisor. I'm not licensed. I'm not anything except for a guy who has been blessed with the ability to trade the stock market, and I've been pulling money out of it for about 30 years for me and for other people, family members, and I've taught a few people to trade, and they are successful. Everyone I have trained is successful. So, you know, my motto is I know nothing and I can prove it, but I know enough. So there you go. All right. This is, I think, a pretty good website. Now, We're going to go up here to the ticker. We're going to type in Dow. And it should give us a list of anything that starts with the word Dow. So there's the E-mini Dow futures, which actually trades it trades overnight even. US 30, I believe, is an ETF of the Dow. All right, so when you first go into tradingview.com and you open a chart, that is actually good enough to deal with. It's just a line chart with a shaded area below the market, easier to see on the black background. And I do have my background set to the dark mode. I don't remember where that's at, but you can set it to white background if you want to. But I don't want to look at just line charts. So if you go over here to this full featured charts, this is where you can add indicators and all kinds of junk. Now, I'm going to go ahead and clear this out because I don't want to see all this junk on my chart. Actually, yeah, let's just remove all these extra lines here. I'll show you that another time. You can compare a lot of stuff. I was actually comparing all the major index together and some of the European and Asian markets and all that good stuff. So anyway, this is the Dow Jones Industrial Average, and it is a full-size contract. And these are daily bars. And I'm going to zoom out here because I want you to really see the perspective of this move down. It is a major move down. However, if you listen to the media, they make it sound like the world is ending, but in reality, the market is still above the lows from when Trump was inaugurated. If you remember, the market cratered for a few days, found its bottom, and has been up ever since. Mark Cuban said if Trump was elected, the market would basically implode and never recover, and he was absolutely wrong. I'm going to delete that thing, and this is the downside of having a free app. You get all the ads. So anyway, this goes back to, looks like May of 2007 or 2015. So that's looking back 5 years. So that's pretty good perspective. The Trump era, I was actually, let's see, 2016. Yeah, this is where he was elected, inaugurated, and the Trump market rally began. Pretty decent pullback there. And here it's going up right now. This move right here, I'm looking for a 50% retracement from the low to this high, which I am not going to calculate it here, but somewhere in here, around 24,000, that would be a 50% retracement. That's where I will look for the market to relax, pull back, and decline some, or even just trade in a channel, at least for a short time at that point. So what we're going to do here is we're going to look at that list of the Dow Jones Industrials. So let me pull that up here. There they are. And I am actually going to drag that on my other screen because I just want you guys to be on the chart. And I'll type all these in, and we're not going to look at all of them. We're just going to hit the highlights. I do want to look at 3M. And so we can get perspective on that thing. All right, these are still daily bars, and 3M actually has been in a bear market for a couple years. This is January of 2018, and that's where it put in its, I believe that's an all-time high. And I'm just using my mouse button for you guys learning this platform. I'm just scrolling on my mouse button to come in on that thing. When I start showing you what technical analysis is and the different stuff, this was actually a head and shoulders, what they call a head and shoulders formation, and when it broke down below the shoulders, it was off to the races a little bit. So, all right, we'll zoom back in and let's look at just this move, which is from here to here. So you have a high of about, we're just going to say 182 and a low of, let's say 117. So, you know, you got 65 points out of 180. So that's a pretty good size pullback, but we're expecting to see that. All right, let's look at Caterpillar. I have actually traded Caterpillar multiple times throughout my trading history, and have sold. I've used it as a way to do covered call options. We're going to talk about that in another lesson. All we're interested in today really is the Dow 30, and using this charting website, which actually I kind of like it. I can see myself looking at it every day, just take a little snapshot of what the market's doing. And Caterpillar from here went down from about 140 down to 88. So yeah, that's like a 40% drop. Let's move along and let's look at Apple. Apple is one of the best run companies on earth, and I have not looked at their balance sheet or anything in the last year, but last time I looked they had a buttload of cash. I mean, like close to $700 billion. The only other company, and I think they probably passed them now, that has that kind of cash reserves is Amazon, who has only been profitable for the last few years. They were a losing proposition because they told their investors this from the get-go, that they were going to invest all of their money into building the most robust distribution system on earth, and would not be profitable for a while. And that's what they did, and now they are highly profitable. So anyway, Apple, before this decline, the decline was actually, let's just say it's up here, 328 down to, we're going to say 220. 328, 220, so that's 100 and something points. So that's 33%. Pretty close. So let's look at Home Depot. Their symbol is HD. They were as high as 247 and got down to almost 140. So that's 100 points off of 247. So that's, 35, 40, 45%. I don't know. I'm not actually calculating. I'm just taking a stab. Let's look at Nike. They're in the Dow. And the Dow, as you've noticed, if you look at it, it's very balanced. It's got oil and gas. It's got technology, manufacturing at different levels, communications, networking with Cisco, and big finance, and the big players in the like Goldman Sachs. They do IPOs and stuff like that. And yeah, but Nike didn't come up. I probably typed it in wrong or something. All right, or I don't know what I did, but anyway, we'll go to somebody else. Let's go to KO, Coca-Cola. Yeah, there's Coca-Cola. They went from 60 to 36, so 24 points out of 60 is, significant, but 35%. Let's look at Travelers Insurance. They're kind of volatile for a Dow stock. And they went from 141 down to like 77. So, that's a little less than half, 45%, something like that. So look for a 50% retracement, pullback, and then a rally. And as soon as this nonsensical, panic-driven market decline is over, it will resume its uptrend. I am sure. I have 100% confidence in the U.S. economy. And this coronavirus is the only thing driving this decline. Now, there are other things going on in the economy, and national debt and spending by our government would be a valid concern. But as far as just pure trading analysis, the virus is the driver for the down move, in my opinion. Remember, I know nothing and I can prove it, but that is my opinion. And we're going to look at one more. Let's look at Visa. You have arrived in the stock market when your stock symbol is one letter. And Visa is V. They went from an all-time high of 213, let's say 214, down to 134, so about 70, 80 points. So that's about 40% decline, so that's pretty significant. I want to show you guys that you can type in any letter of the alphabet, and there is a stock that has just a single letter for their name. A is Agilent. I'm familiar with them because they make test equipment for fiber optic systems, and I used to use some of their gear when I worked for AT&T all those years. Type in B, Barnes Group. I think they're a real estate outfit, but I'm not checking myself on Google or anything. C is Citigroup. If you have a Citigroup credit card, that's those guys. They also have banks. They are a rather large bank. The letter D is Dominion Energy. Not familiar with them. Let's see what E is. Some kind of something I'm not interested in. F should be Ford. Yep, Ford Motor Company. Wow, even before this decline, they were trading $9.57 and they went down to $4. So, you know, that's no different than going from $90 to $40. So that's about 55-60%. So that's a huge move down. I'll tell you one thing though, I wouldn't mind owning a little at these levels. Get out of it somewhere in the $7.50 or $8 range anyway. But that's just me. I'm not recommending anybody else to do that. Let's see what the letter G holds for us. Genpact, not familiar with them. H, Hyatt Hotels. I'm sorry, I'm a Trump guy now. I would have to stay in a Trump Tower. Sure, he'll give me a discount and make it where I can afford it. Intelsat is the letter I. Don't know anything about them, but they are down below $2 a share, so I think the best way to analyze that to say they may suck. And I'm sorry to be so blunt, but people like to talk about trading penny stocks, and your odds of success doing that are pretty slim, but more power to you. It's your money. Nobody is going to manage your money with more care and concern than you. Even if you're going to use somebody else to actually invest your money, you need to at least know how to look at the market so you can kind of tell what's going on. And over the next series of lessons, I'm going to teach you how to look at when possible pullbacks are going to occur. And there was indicators on this one even before the thing. And these were probably, you know, when you see it go down and then rally back up, that's when the news is first hitting. Oh, it's not so bad. Oh, it's terrible. Oh, you know, so it's just a bunch of people's opinion. J is Jacobs Engineering. Let's see what K is. Kellogg. Tony the Tiger, I believe, is Kellogg's. So that's the Tony the Tiger stock. It's a food stock, so it's still above its range back here from, you know, the summer. Gaps will always fill themselves in, and that one did. It actually filled in on this one and then ratified that contract again with the next down move. But Kellogg is probably not in danger of going bankrupt anytime soon. Let's see what L is. L is Lowe's. And we looked at Home Depot, and now we're looking at Lowe's. I want to show you how to do a comparison. You can type in Home Depot HD, and it'll actually lay it. You'll see they move pretty similar. Lowe's is trading in the $33 range, and Home Depot. What is Home Depot? I don't know. It's hard to read this stuff when you have a comparison going because it changes from a price to a percentage. But we can remove those guys and we can just type in HD. I'm thinking Home Depot is higher than 33. Yeah, they've always been considered a much stronger player in their market, so their stock price definitely reflects that. But you can track them kind of with each other because they are fully correlated as far as the markets they serve. So anyway, we are going to end this for now, but I just wanted to show you. I guess I really didn't explain what kind of charts these are. Let me zoom in a little. These are what's called candlestick charts. And if you'll notice, they look like they have wicks on them. And the body represents the open and the close, and then the wicks represent the daily trading range. A red bar means that it closed lower than it opened. A green bar means it closed higher than it opened. So here you had a market that opened, ran down to here, and then closed high on highs. So looking intraday, you would see all kinds of fluctuations, but anyway, that's the simple way to look at it. So that is what daily bars on several of the Dow Jones Industrial stocks look like, and what a candlestick chart is. In the next lesson, we're going to look at some indicators. I don't use a lot of indicators, but there are two that I like to have up other than just drawing lines on the chart. And I like to use Fibonacci's, but I have not found that on this charting package, so I'll be looking for that and see if there's any way to bring that in without paying. It's probably available, but it's considered a premium service. It's a math system designed and still used today, but it was designed a long time ago by like a 12-year-old Italian kid, hence the name Fibonacci. So we're going to look at indicators in another lesson. So let me get my awesome video queued back up, and I thank you guys for tuning in. Y'all have a wonderful evening, and be safe out there. Be blessed.